You know what's wild? I built a six-figure portfolio in my brokerage account without ever picking a single stock. No meme stocks, no crypto roller coasters, just good old-fashioned stock and bond funds. And the best part? My money now works harder than I do. Here's how it happened. About 10 years ago, I set up automatic contributions to my brokerage account. Week after week, without fail, I invested about $955. That's it. No stock picking, no market timing, just consistency. Then I focused on building my online business and honestly forgot about my portfolio. I didn't check it. I didn't stress over market crashes. I just let it grow in the background. Fast forward to last month, I finally logged in and was shocked. The personal investment returns totaled over $405,000. Out of that, I personally invested about $495,000, and the cumulative returns grew to $405,447.87. That's the magic of compounding and consistency at work. My average return? Around 10.8% per year. And that's the moment I realized boring works. That's why I started this YouTube channel, to show that you don't need to gamble or chase trends to build wealth. So let's break down what's actually in my portfolio. It's just 10 funds, each with a specific role. The foundation, bond funds, VTSAX and BND. Steady bond funds. Not flashy, but they help smooth out the ride when stocks get rocky. The growth engines, U.S. stock funds, VFIAX and VOO. Both track the S&P 500, the 500 biggest U.S. companies. VTSAX and VTI cover the entire U.S. stock market, giving me exposure to almost every company in America. Specialized growth, VGT, my tech fund, Apple, Microsoft, NVIDIA. More volatile, but with huge growth potential. Income funds, VYM, high dividend U.S. companies, VYMI, high dividend international companies. These send me regular dividend checks, which I reinvest to accelerate compounding. Diversification through real estate, VNQ, a real estate fund that invests in REITs, basically owning real estate without becoming a landlord. Together, this mix gives me diversification. Some funds grow fast, some pay steady income, and some keep things stable. When tech struggles, dividends keep paying. When stocks dip, bonds hold steady. Every fund has a role to play. And this is where compounding kicks in. Every dividend gets reinvested. Every share earns more returns, which buys even more shares. Over time, it's like a snowball rolling downhill. Small at first, but unstoppable over the long run. Sure, there were gut-wrenching months. In March 2025, my portfolio tanked by over $41,000 in just 30 days. Imagine watching a brand new car or even a year's salary just vanish on your screen. Most people would panic, sell, and lock in those losses. But I didn't. I stuck with the plan, and here's the crazy part. Just a few months later, the market roared back. In June, my account's personal investment returns jumped $36,669.01. And in July, they were another $18,390.06. Those losses that once felt massive, they turned into nothing more than speed bumps on a long upward climb. That's the lesson. The biggest wins often come after the scariest drops. And if you can stay calm when it feels like everything is falling apart, compounding will do the heavy lifting for you. The key wasn't timing the market. It was time in the market. Week after week, year after year, I just kept investing automatically. And 10 years later, the results speak for themselves. So if you're just starting out, don't overthink it. You don't need to pick the next hot stock or time the perfect entry. Build a simple, diversified portfolio, automate your contributions, and let compounding do its work. That's how I built mine. And if I can do it while barely checking my account for years, you probably can too. If you found this helpful, make sure to like this video, subscribe for more, and let me know in the comments what's in your portfolio. I'd love to hear your story. Thank you for joining me today. one step, one contribution, one share at a time. If you stay consistent and stick to your plan, your future self will thank you. Wishing you steady growth and financial peace of mind, and I'll catch you in the next video.